Starter homes are disappearing from the United States. In the early 1980s, as many as 40% of the new homes built were considered entry-level. By 2023, just 9% fit the criteria.
Give it another 20 years, and literally no young person will be able to afford to purchase a home, period.
Meanwhile,
so one of the interesting things that they highlighted, so their definition of a starter home was based off of square footage. They used, I believe, 1,400 square feet. And so this is a trend that has been occurring in America where houses are getting larger over time. And so if you keep increasing the size, that is going to be true. It's an interesting choice for how they define starter homes. I think it is fair to some extent where the larger the home, the more expensive the home is going to be, especially considering there's a lot of metrics around like price per square foot. And generally speaking, if you got a larger home, you'd expect it to be more expensive than a smaller home. But I'm not sure if having a flat, stagnant square footage is the appropriate way to do this. I would expect and be curious as to what this chart would have looked like if we did something like the smallest 20% of homes or something like that and see how those prices and availability change over time. But I think it is fair to say small homes are less prevalent in America. I think that is something that is broadly true. And that could be increasing the starting price for a new home over time.
While a slowdown is mounting in the home building industry, which could contribute to the ongoing decline of the starter home.
Both housing starts and building permits, which are an indicator of future construction, have slowed down this fall, and it's not just seasonal.
There are over 3 million potential first-time home buyers in the country. They're up against high home prices that keep rising.
What you're starting to see are mini price bubblettes in markets that are an hour, 2 to 3 hours from major metropolitan cities.
It is such an unusual market because we have an all-time low of first-time home buyers, but an all-time high of all cash buyers.
So where did all the starter homes go? A starter home is typically modest in size and price.
It's the most affordable home in any market. If you're in the Midwest, maybe it's in the $100,000 range. If you're in California, a starter home might be in the $400,000 range.
To me, a starter home used to be a smaller condo, a smaller space, and someone would upgrade maybe after 5 years as they get married or have a family and want to move. But now we're actually seeing that most people are buying their first home as a single family residence and really planning on staying in place.
America's home builders are making fewer of these kinds of units.
If you look,
That's an interesting point that she's making. It sounds like they're going to continue on that. And so when I hear of folks looking to buy a home, they do classically think of independent, detached, single-family home, like a classic, like when you're a kid, when you draw a house, like the rectangle with the triangle on top. And so that does make sense. And I think what she highlighted is a really good option, which is especially in more metropolitan areas, they're going to have way more condos or townhouses or co-ops, depending on the region that you're in. And so those are going to be the much more common standard home, even if you are fairly wealthy. Like if you're in New York, for instance, you could probably get a condo that's millions of dollars or even tens of millions of dollars. And so it doesn't necessarily have to mean like you are not affluent in some way or you aren't going to get the ideal home if you go into a condominium or a townhouse of some sort. And so that I would definitely encourage folks to do because, again, in most areas, if you're working where there's a lot of jobs and there's a decent market, you're probably going to also see that there's going to be less single-family homes, and those that exist are going to be more expensive. And so looking for a condominium that could be smaller in size and also cheaper to start out with makes a lot of sense for a lot of first-time home buyers, and I would encourage it myself.
look at the number of single-family starter homes, those defined as being 1,400 square feet or smaller. We used to supply anywhere between 400 and...
So one of the interesting things that this individual said is that he specifically stated single-family homes of 1,400 square feet or less. So they don't actually have this, as you can see at the top. It has number of new homes constructed below 1,400 square feet. So this might also be something where the numbers are slightly skewed towards the definition that they have, because I would expect while single-family homes are decreasing, there is going to be a lot of creation of homes in areas closer to big metro areas, which would include condominiums, etc. And so those I think should be included, but since that last individual just stated single family homes under 1,400 square feet, that could be what this data is showing. So this might be skewing it a bit here.
500,000 units a year.
Over the past decade, builders have put up less than 100,000 homes each year.
Really, by far, the number one reason is the increasing difficulty that many builders have in dealing with zoning regulations.
Zoning laws are set at the local level. These laws can determine the size of each lot in a neighborhood. They can also specify how far a structure is set back from the property line, how tall it is, or how many units are on site. In many cases, these laws create an opportunity for local residents to challenge new development. The residents often raise concerns, like overcrowding of schools and wear and tear on local roads.
A lot of this has to do with density restrictions within local communities. They may not want a townhouse or a condo community coming in, but they absolutely will welcome a single family community.
Zoning codes are found all around the country. The most restrictive ones are often found in major cities.
Many builders are not leaving money on the table. They are just simply unable to build, or it's become so expensive to build that they can only build high-end single-family and high-end multifamily.
Given the high price of land, labor, materials, it's very difficult for big home builders to build the entry-level homes. There are a couple who specialize, like D.R. Horton, which has an express homes division, which specializes in starter homes. But for medium-sized builders, it's just very expensive in order to pencil all the costs they have and make it affordable to that lower-end buyer.
As a result, home builders and first-time buyers are targeting further-flung locations.
We've definitely seen a trend toward purchasing a home further from the urban core. So you do see a lot of new construction in suburbia and exurbia.
Home values are now rising most rapidly in low-density and rural areas. Experts say that relaxing these codes could lead to higher levels of home building and preserve affordability.
For example, in San Antonio, there's some builders that are building sub 1,000 square feet single-family detached homes, right? Which would have been almost unthinkable just a few years ago. So the market is reacting, but its response mechanism is really limited because of the rules of the game.
Some areas with less restrictive zoning codes are welcoming many newcomers. For an example, see Metro Atlanta.
Home is in Atlanta now. I'm currently in Decatur, Georgia, which is right outside of the perimeter, so I have easy access to the city. It gives a little bit more of suburban-ish kind of feel. It's just the culture, the energy, the aesthetic, the environments, a more elevated experience in day-to-day living, honestly.
Lillian Mantaya is a filmmaker and entrepreneur. She was in line to buy a home in the Baltimore area in 2024, but that plan fell through. Since then, she's moved to Atlanta to live with her sister and come up with a new plan.
I did grow up in Baltimore. I gave Baltimore a shot in my adulthood with my children, and I did the 9 to 5 and, attempted to buy a house there and everything. But Baltimore wasn't providing just the lifestyle, resources, community.
This is a good point that this individual is making. So we covered this a little bit in one of our past videos of younger folks having a trend of staying home with their parents more often. And so I think this is an important aspect, and this individual I think is doing it right, where for the individuals who are staying at home with their parents, one of their big arguments was, well, I can't have a house right next to my parents' house, even though likely those neighborhoods changed over time. And so, for instance, that individual I think was in New Jersey somewhere. And so likely New Jersey being close to New York City, those prices increased over time as it was close to one of the largest metropolitan areas in the world, really. And so this is where they were choosing to improve their quality of life by staying at home, reducing their expenses. And so I do actually advocate for that, generally speaking. I think it's a good trend for people to stay at home. Many other cultures do this. Sometimes they stay at home all the way up until they're married, for instance. And so it's totally normal to be 20s, 30s, even older at your parents' home in various cultures. And I think it's very reasonable to do that especially if you're helping contribute in some way. And so for this individual, she was looking for a home in the Baltimore area. And what she had highlighted was the lifestyle, etc., that she was looking for. And so I think this is really true, which is if you're looking in larger cities, the housing prices of anything close to the city are going to be quite exorbitant. You're going to have a really high paying job in order to be able to sustain that lifestyle and still live the rest of your life the way you would want it to be. And so I think it's a very reasonable, responsible plan to go someplace a little farther away or go to another market. I think changing markets entirely will depend on the particular individual and the job opportunities that you have, because it might not make sense to switch markets entirely if you're going to make noticeably less. Because again, throughout your career, you're going to hopefully increase your salaries over time. But I do think, generally speaking, it is reasonable to second guess or question, do you need to live at this house in this area? And is that actually going to be the lifestyle that you need? So you avoid things like defaulting on your mortgage, not being able to pay for repairs, really not being able to enjoy your life. And so I think that makes a lot of sense. And this does lead to net migration across different cities at different times as the economy fluctuates.
That is needed for me to thrive, and Atlanta has been able to kind of just support me more.
Experts say that more dense forms of housing could have helped first-time buyers, particularly in crowded areas.
We do know that local communities are trying to address the lack of housing inventory in pretty unique ways. So accessory dwelling units is certainly a popular approach right now. That's one solution, but I think we need to be looking at adaptive reuse as well. So looking at vacant hotel motels, looking at vacant residential malls, and how do we bring residential housing units into those areas?
Much of the new construction since 2020 is in luxury apartments, with units that are not for sale.
The recent boom in multifamily construction has been on the higher luxury end, but it's easier for multifamily developers to get in and pencil that many apartments because they're renting them, and rents have been very high.
That was a great point that they just made. So earlier, even I made the argument of maybe there is more development in smaller spaces. They technically didn't disprove that, but they did highlight that it is much easier to build these segments for apartments. I think in the area that I'm in, I think this all the time. I see some new construction and I say to myself, wow, that would be a fantastic place to buy a condo in. It's a very central location. It would be great to be able to live here. But then they're actually like building like 3 large apartment complexes and you can't possibly buy there. And so that is unfortunate. So that could be true. I would like to see data on it, but I think that is a fair point that anybody who's looking to make smaller units, because again, even for an apartment, you could even get away with even smaller units. I believe for the economics of being a landlord and renting out places, usually like bedrooms are the things that get you the most rent. And so sometimes even having studios, for instance, can be quite profitable because you can really pack in a really small area and then get the majority of the rent. So if you think about your rent in your area, you know, studios might be half the price of like a 2-bedroom, but they might be like 75-80% of a 1-bedroom, even though you might still have the same number of people living in both of those locations. But then it's also going to be noticeably smaller than a 1-bedroom. And so these are different ways of trying to optimize your revenue as a landlord. And so it does make sense that you could even go for a condo where most condos I would expect to have at least a 1-bedroom. And so you could potentially like pull that back a little bit to make a lot of studios, for instance, or just smaller units in general to be rented out. And people generally are okay with that when you're renting, because usually you're not sure how long you're going to stay when you're in that situation, or you don't really have any other options. So you usually deal with smaller spaces compared to individuals who buy a home of some sort.
Finances are a big barrier for first-time buyers. The premium paid to buy a home has increased sharply relative to renting over the past decade. The increases in home prices have also outpaced increases in wages.
Yeah, this is going to be a big one. So you might not be able to see the amount, but I'm going to move myself for a second here. And so home prices have actually increased by 114% compared to wages, which is insane. But this definitely makes sense considering all the weird things that have been happening to the market. Generally speaking, the job market got a little tighter in recent years, either during COVID, depending on which sector you were in, to right after COVID. It impacted different sectors differently. And this has been an issue for them. And so home prices have certainly gone up in price, outpacing wages, and that's going to make housing affordability really tough. And especially just with inflation, broadly speaking, this has been really hard, as well as interest rates for new mortgages. So this is definitely a huge issue people are complaining about at the moment.
As a result, home sales are down across many markets, and the median age of the typical first-time home buyer has climbed to 38. That's up from age 29 in 1981.
Wow. 29 in 1981, that's quite a difference. But that is about a 43-year difference, I believe, if my math is correct there. So that is a good amount of time, but that's also a pretty large age gap, going from 29 to 38. I don't believe life expectancy has increased by 9 years in that same time frame. If anything, I believe during COVID, life expectancy actually dropped down quite a bit. So that is certainly a very meaningful number. That's definitely a much older individual. I think similarly, ages of starting a family, like having a child, have similarly increased, or people are opting out of having children at all. Same thing with home ownership, is some people are seeing these things as unattainable portions of their life that they might not be able to afford, or maybe they won't be able to handle, especially like if you think you're in a studio, you might not be able to consider what your life would be like having to support a child, or having that limited space or limited opportunities. And so a lot of these metrics have been going in a very bad direction for most folks recently.
Thinking about all of the headwinds that a 30-year-old may have, like student loan debt and car loans and credit card debt, and then they have rising rent. And so keeping that all in mind, it's hard to save for a down payment when housing affordability is really out of reach.
The problem is you have the most demand on the low end of the market because affordability is so rough right now, but you also have the least supply on the low end of the market.
The average price of homes has increased rapidly too. Nationwide, home prices have climbed over 52% between January 2020 and October 2024. Adding to the burden, mortgage rates have returned to their standard historical range, near 7%. Homeowners with a mortgage are paying 29% more than they would if they rented the same house. Dynamics like that are shutting out all but the highest income Americans out of the market, at least on average.
We're seeing first-time home buyers come into the market using inheritance, using 401k or stocks, cashing those out, combining all of these resources, and actually making an all-cash purchase.
Investors are buying homes too, but economists saw their shares jump to an all-time high in 2024. Still, they make up a tiny fraction of the overall housing stock.
The issue of large-scale investors is really not an issue. If you look at their share of the market, it's only 1% to 2%. However, if you look within fast-growing markets, particularly those that are affordable, and in the South, those entities are making it a little bit more difficult for buyers to purchase. Having said all that, if there was a normal amount of supply and we didn't have the shortage, this would not be really an issue.
With elevated prices on the market, today's buyers may need to rely on outside help to finance a home.
I think it's increasingly difficult to buy that first home if you don't have help. You know, in a more affordable market, it's $400,000. That means you have to come up with $80,000 in down payment if you assume the typical conventional loan.
Yeah, so this is some interesting data, so I'm going to pause here for a moment of just covering some of the basics. These later ones are monthly payment, total interest, and then total out of pocket is the final line. And so they've covered a few good points. One individual highlighted student loans. This is definitely a key one, especially if you're in your 30s. You likely have student loans, or your late 20s, you definitely have student loans. And so even younger generations, so I know millennials have complained about this quite a bit, but I think there's actually data showing that Gen Z is actually coming out of school with even more student loans than millennials did on average. And so this is definitely becoming a problem that could even get worse over the coming decade or two, between the combination of the same shortages, people having even worse loans that they're having, and as they highlighted, the interest rates have gone back to what they highlighted as long-term average, which does make sense. For reference, I know a lot of people hate on like boomers and things like that of having their house that was super cheap. But also I believe there was a good portion of time where like interest rates were like 12+%. And so while their house prices might have been lower, proportionally, it's unclear how much. I haven't seen any data actually pointing to interest rate plus home price. And so it's easy to compare home prices because those are where things are changing the most. But for reference, in like 2020, interest rates were like 3%. And so you would have had a fantastic mortgage payment compared to the price of the home, compared to especially boomers who might have had like a 12 or 15% interest rate. Even if the home price was proportionally half or something like that, the interest rate could have been 4 or 5x what it was in 2020. And so this is where you need a number of factors to be able to truly compare how these things are going to shake out. But it's still definitely tough. And the other thing that I want to highlight for folks is while this is emphasizing a lot about home purchasing, you don't necessarily need to buy a home to be financially stable or financially independent. Renting sometimes is seen as throwing away money. I think this is a common phrase used, especially by like real estate influencers who highlight that you're just throwing that money away. You should be having a home, sort of like forced saving plan. I think it's tossed out around here. And so one of the key differences, even as they highlighted in this video, is that you can actually rent in some places much cheaper than it would be to buy a house. And one of the phrases that I think is useful to keep in mind is when you rent, usually that's the maximum you're going to pay. Obviously, you should include your renter's insurance or whatever that is, but whatever you're paying on a month-to-month basis, that's the most you're going to pay until obviously your rent potentially increases the next year. But if you have a home and a mortgage, that is going to be the least you have to pay. There's repairs, there's other things that could come up. And so it can be noticeably more expensive to have a home of a similar size because you have to take on these other expenses. And so this is something to keep in mind. You aren't necessarily better off having a home. I do think it makes a lot of sense, especially if you can find a starter home, something small to get started, something that's relatively cheap for your income. But again, you don't necessarily have to be financially successful. So you don't necessarily need to like hold yourself to that standard, especially during times like now where it is legitimately hard to buy a home, especially as a younger individual, given all the things kind of fighting against that.
It's really difficult to come up with that down payment. So we do see in the data increasingly more consumers getting help, whether that's from their parents or from down payment assistance programs.
There are over 2,400 down payment assistance programs nationwide. Depending on your income and where you live, the aid can be substantial.
I haven't purchased a home yet, and I've been in the process of purchasing a home. But being in this process, I definitely have more of a optimistic, I guess, perspective with home buying now. And I just talked to a realtor here, and she even told me that you are able to purchase a home even with a credit score of 500 and something. So I think it's just a matter of taking the initiative and knowing that you can be a homeowner.
Regulation at all levels of government affect how homes are built.
One point, she did say you could buy a house with a very low credit score. I would take a look at what those stipulations are. It might be possible, but it might not be a good idea to have a low credit score and try to get a home. A similar tactic is another thing to look out for if you're thinking about buying a home, is that banks will give you an amount that they say, we will approve up to this amount for a loan, for a mortgage for you. And usually it's going to be something astronomical. Like it's going to be something that like you probably should never even consider. Like at best, you should probably start thinking about maybe something conservative, like half of whatever the maximum amount they're willing to let you loan out for, because otherwise those payments could be huge. And also, if you have a low credit score, you're likely going to get a worse interest rate, because while they're showing those interest rates as a static number, like 7.14, I think was in the previous example, they're not showing that actually your credit score could make that number go up or maybe even down in certain situations. And you definitely don't want things like variable rates, because if the interest rates go up, then your house might become even less affordable for you to own. So while it is possible for you to buy and like get a huge loan or have a low credit score and have potentially a very high interest rate, that doesn't necessarily mean you should do it. And again, not buying a home isn't always the right choice. So you should be very thoughtful about making what is likely going to be one of the largest purchases in your life. So give it some thought, think through it, and know that sometimes people are incentivized to encourage you to make purchases. Sort of like, again, this was a realtor in this example, like a car salesman. You know, they are historically individuals who are incentivized by you overpaying. And so make sure you're thinking this through, and also you're talking to people who are not directly benefiting from you making a choice that could negatively impact you, like realtors or the mortgage brokers, for instance. So try to talk to like maybe family or friends. Worst case, check online, or maybe even seek like a financial advisor who is fiduciary, who could give you some advice on what you are able to afford or what you're not able to afford.
Experts say they're holding back new construction.
This crisis is worsened by various factors, including rising construction costs, regulatory burdens, and limited availability of buildable land.
There's definitely excessive regulation, a lot of inefficient local zoning.
The zoning codes really originated nearly a century ago, and it made sense at the time. However, since then, there's been an increasing thicket of layers that have made it increasingly difficult for builders. This is sort of the concern, unfortunately, with policy, is sometimes you have to think about in advance things that can go wrong. Like, so think about zoning. Like, it made sense in the 1900s. It began in New York City. It made sense if you needed meat packing plants to be a little bit away from residential areas. But you take that to an extreme and out of New York City and into middle America, and then it causes problems.
Regulation at this point can make up 25% of the builder's cost to build that home, and there is a lot of talk of deregulation, especially under the new Trump administration.
Until more housing is built, prices are expected to keep marching upward quickly.
The willingness and desire for homeownership amongst renters, particularly younger renters under the age of 35, is very high. However, the problem is the obstacles are also just as high.
Thank you for watching. If you've enjoyed what you've seen, please hit like or subscribe. I'll see you around.